All right. Hey guys, Brad here, Elliott Wave Made Simple. I've put in my 10,000 hours learning Elliott wave theory, so you don't have to. All right, today we're going to be taking a look at natural gas, crude oil, and silver. Let's go ahead and dive into the natural gas chart. All right, so we're looking at the daily chart of the November contract. And this box right here was my ultimate target box, which got struck. It is possible this is a completed structure to the downside. And what we then look at as an LA wave guy is we want to see whether a bounce off of a major target area, we want to see if the bounce is corrective versus impulsive. If it's corrective, that suggests that we are still going to come down lower again. If it's impulsive, it means that we're going to come down correctively and then find support in our normal fibs, our normal standard ideal fib targets for where support should show up and price should stop going down. So originally I was thinking this could come down lower, either strike the lower end of this box or, as I've got here in this yellow orange color, could produce a bounce for B, which is certainly happened into the box that I have had on this chart for a minute, which suggests the C wave could come all the way down here. So the reason I'm actually going to take that off my chart right now is because this move, which I'm about to show you, looks impulsive and looks impulsive enough for me to get rid of my bearish thinking on natural gas. And but I'm not just making that up as an opinion. I'm just saying because of the internal structure of this move that it looks impulsive. And the second clue is uh, B waves typically come up further. B waves to me, first of all, don't follow a clearly impulsive structure. And if they do, because it is possible for a B wave to sort of fake you out and look like an impulsive structure, but if it were, it would get stretched and extended and it would be striking the higher fibs above the 618. That's just from my experience. B waves tend to exceed the 618. Does it have to? No. But look, we are just hunting for clues. And this is an important part to make this point. If you're new to Elliott Wave, if you're watching these videos, I'm really about to give you a bunch of parameters. I'm going to give you the levels, okay? Because I don't want to turn this into an educational video. But we use certain things to create clues. One is Fibonacci. Where is the price striking Fibonacci retrace levels? That's a very big clue. But then I combine that with the internal structure of the move. And if you've been watching these videos long enough, you'll know that I'm repeating myself over and over again because it's always a game of collecting the clues. So we look for Fibonacci levels and we look for the internal structure of a waveform. And what I mean by that is it corrective looking or is it impulsive looking? And, another way that we gather these clues is the context that LA Wave presents to us. So, for example, let's talk about context right here of this natty gas chart. Because of where this price terminated, which is inside of this target box for a completed five-wave structure down, uh, you know, this is where I was expecting a bounce. And then, so that's clue number one is the context. Where did this bounce start from? Okay, it started from a box that would be supporting the idea that this could be the low. Then it's the structure of the bounce, which in this case counts impulsively, which I'm about to show you that on the lower time frame. And then there's a Fibonacci. Where this might be terminating is right at the 50% fib, which is too shallow for a B wave. So you just saw me take off these levels at much lower levels. So now let's drill down on the lower time frame and take a look at Natty on the 1 hour time frame. Now here you can see I had a box and a target box to the upside where I was expecting rejection. And you can see it got rejected 3 times and we were scalping to the short side, and I always leave a runner on. I take it off with just a few pips gains when it comes back against me or break even, but I've learned don't even go break even. Why? Just make it a few pips in your favor on the runner I'm talking about. So you take your gains quickly and then leave a runner on. Now, I failed with the runner once. I failed with the runner twice. But by the way, this was a profitable short scalp, another profitable short scalp, another profitable short scalp. And this time there's a runner still there. So I'm still short. At some point, this is going to bounce. And I would be surprised by nothing. But the idea is it's going to hold this high. Can it bounce? Yeah. Yeah. Very likely it's going to bounce soon. But um, the idea is to look for price to potentially. Now I'm going to put on a potential. This is speculative. So typically an A wave, not unusual for it to target the 382. If it's going to be corrective, you're going to get something like this. Okay, so the 5-wave structure, it could be an A wave, 5 down. The 382 is a typical target for an A wave. It's a region, not an exact level. And then the B wave bounce, minimum 618, not a hard and fast rule. But the point is, we'll use structure to inform. So once this bottoms, we'll look for bounce and then one more shove down. Typically, a wave 2 can target the previous degree wave 4. So let's see, that would be $2.72. I'm just looking for bearings, $2. Yeah. So this makes sense, actually. Now, who knows about the timing? So timing is a different game that I don't play. I'm tracking structure. All right. So for natty gas, the most obvious parameter right now is this last high. To see this pullback continue, it's going to bounce. So another parameter would be you want to see it catch support somewhere around this 382. If my assumption is right that this is about to come down correctively. So that could be an area for a bounce. Doesn't have to bounce there, but it's just, this is a typical, normal, I would say reasonable idea. And then actually, let's see, the 382 is just call it 280. So yeah, so that I like this actually, because this is a significant level right here, 2776. So let's see. I mean, if it's going to come down further, somewhere around here, it should bounce. And then we'll measure and we'll look at the structure to make sure that this looks corrective. This is impulsive looking, but it could be an A wave. So get a corrective bounce, something that comes up to at least a 618, and then one more shove down. 266. Yeah. Yeah, actually, I'm liking all this just based on these levels. So here's your parameters. The top, it really, I don't think it's going to come back up. If it comes back up immediately from here, it should not make a new high. I think a more realistic expectation would be if it's going to keep coming down some more, it should hold somewhere in this zone and then get a bounce, not make a new high, and then come down all the way down into this area down here, which would then be a long opportunity to get ready for the seasonality to come a little earlier this year. Now, forget the timing. Forget the timing. We're going to know more as structure unfolds. Okay, so there's your parameters. It may be, now look, I'm just putting a speculative pathway on here. If it comes down a little bit more, it could be something like this, like an A, B, C. Okay, something along those lines. And we're gonna know more early in the week regarding this region right here. Okay, so that is your natty gas. Let's move on to crude oil. Now, these yellow fibs have been on my chart for a minute, thinking if this comes up correctively, A, B, C, then somewhere in these yellow fibs is where you could expect price to get rejected. And, it looks really strong. It's funny when you zoom out on a 4-hour chart, it doesn't look quite as crazy. But man, when you're scalping day trading on the lower time frames, it looks wild. So this is the general area that would be reasonable. Also, notice the 618 over here. So you've got the yellow fibs, which is where A, B, C typically terminates somewhere. This happens to be like right in the middle, but the 618 is right in the middle. of these yellow fibs, and it did get rejected from that area. So really what the $1,000,000 question is this a C wave up? This is a lower time frame now, and this is it. This is the bounce, the larger degree bounce of this having been an A, B, C, and we are about to continue lower. So the clue for that is, what is the structure of the decline? So if we drop down to a much lower time frame, it's still tough to discern a clear structure, but what I will speculate on is that this is a 1, 2, 3 down. And if that is the case, if you've been watching my video, now look, I'm not going to use a magnet and get these levels exact like I normally do, but I'm just going to measure this for a potential wave 4, which, as you know, may not exceed into the price territory of wave 1. And typically it doesn't get much past the 50%, but it's all about context. But at this moment, this very much looks like a wave 4. So the expectation would be to finish off, if this is going to be truly bearish, it needs to finish off a 5-wave structure, which would be one of whatever the next structure is. So one way to do this is to measure and try to discern where might this 5th wave terminate. So what I'm doing is I'm putting on a ratio box, and I'm not going to try to get it exact because I'm not going to waste your time getting it to the penny, but I normally would do that. So, if this is going to get one more shove down, then this would be a decent area for price to catch some support. This area right here, I'm just dragging it over because that's what I do. Price has memory. So this is also an area that is proven to be support. Okay. So, this area is inside of this ratio box. Now, am I predicting that? No, because on these smaller time frames, these kind of measurements are less reliable. But honestly, as long as price stays below this level right there, just call it 75.18. As long as price stays below 75.18, it is possible to see this price come down into this box early in the week, overnight, early Monday morning, get a bounce that does not come back up here and exceed that level, and then you get a much deeper move later in the week lower. So one thing at a time. For right now, if the bearish oil count is going to play out, you should not see above 75.18. Can this bounce and come back? Of course, it could do anything. A wave 4 is a variable, highly variable, unreliable wave form, especially on the lower time frame. So all I'm doing right now is showing what the structure might end up looking like if this is truly bearish and going to give us a move lower early in the week down into this area. And then this will be wave 1, then you get a wave 2, and then you get the strongest, most powerful wave, the most profitable wave, which would be a wave 3 to the downside. I'm not predicting that. I'm saying this needs to complete this structure down into this area and get a corrective bounce. See, because then you can stay small, layer into some shorts, and put your stop above this high over here. So that's another parameter. But I mean, by the time price gets all the way up there, something else is going on. But I mean, that is a parameter of sorts. Okay. But that's going to come into play if we get, if this comes up directly and gets above here, well, then I'm wrong, and I have to show you an alternative count, but I'm keeping it simple. You want to see a completed 5-wave structure. You do not want to see price get above 75.18. And once this happens, by then, if you're in the Professor's Club, you're going to see my projections from there, but one step at a time. All right. So now let's hop down into silver. We are looking at a 2-hour chart. What's interesting to me about silver The reason this is such a pivotal week, very critical week. Why? Well, because if this is corrective and this, meaning this move up, if this is corrective and this is really an A, B, and we need to get a C wave, we need to get one more shove lower, then it is going to wreck this count. And I'm just giving you a quick and dirty view of where an ABC correction may terminate. Call it 2659. So I will be out of my longs by then. I'm holding longs in a swing trade. I'm scalping also in a different account. But the idea is if this is an A, B, C for, excuse me, A, B with needing a C wave to come back down here for a larger degree wave 2, this is the target area. So just call it, you're going to see below 27, 2650 is a perfectly good level. Nothing wrong with 2650. Although for me personally, that's going to wreck my swing long trade. So that is the first parameter I'm giving you. And it might seem like crazy because it's so far away from where we are now, but I'm just warning you based on the structure. If it crashes through all of this support that it's built up and all this beautiful bullish structure that is still intact, if it wrecks all of this up here, this is a target. Okay, so now let's get a little bit more dialed into what more actionable levels are. So you can see this is the chart. If you're in the Professor Trades room, I just keep trading the same chart. The levels on this chart are good. They continue to be good. What's happening right now is price needs to have a sustained break out of this area. I mean, it's that simple. If the bull, that's why this little rocket emoji is there, because we are chopping in this range, but we keep making higher highs and higher lows. So just forget Elliott wave for a second. Higher highs, higher lows. Okay. That's what's happening. So is it easy to trade? No, because look at the volatility. Look at these wild moves. So these white fibs are a larger structure that projects, I know, making your head explode, way up here. Okay. This is just what the fibs are doing based on the structure. This is not my opinion. This is not me making stuff up. This is me measuring stuff using Elliott wave Fibonacci projections to give you targets. But just like I showed you a target way down here, $4 or $5 lower, is also based on the Elliott wave. So what I'm doing is I look at the lower time frames. The first parameter I want to give you to remain immediately bullish, it's got to stay above 3175. Now I've been saying that ever since over here, and it look at this. It came down to that zone last Thursday. It tinkered around that zone. Look, it banged into that zone almost to the penny over here, 3175. Then it rocketed above it and it held it as a back test, and then it came down and it bounced off it, and then it played games with it. It lost that level. It created another higher low right into this zone. So there's no other way to view price at this exact moment. There's no other way to view it other than being bullish because it's making higher highs and higher lows. It's just what it's doing. So if it comes down below 3175 again, that's the first warning. I would actually expect this to come back to drift lower again. That would be ideal. Come back down. If you want to get long and it comes back down, you can get long. You can get long in this area and put your stop below 3175. But I wouldn't want it to be a hard stop because look at this price action. It moves like crazy. But that is a parameter, this zone, 3175. The next important level to me, the way I'm thinking about this, for this immediate structure to retain its bullish potential, in other words, to be immediately bullish, man, I do not want to see it get below this last low right here. Just call it 3126. So do not want to see below 3126. But the real line in the sand, like if we get below here, I think we're going $3 down. That's why I put the bomb there. That's why I have a sell signal there. Now, I'll know more if it makes it down there based on what kind of structure unfolds on the way down. Okay. And we'll be dialing in the Fibonacci at that point. But for right now, your parameters in silver are very simple. 31.75. The next level is 31.25. Right? So it's a 50-cent window right in here. That's the question. And if it wants to go higher directly, it needs to get above the zone. And really, it could start running. If whenever it makes it back up and gets through this zone again, and in particular 33.47, which is the top of that zone, it can run. Because if it's going to be in the heart of a wave 3, which is what I'm showing you, this crazy wild target way up here, wave 3 is the most powerful, swiftest, direct move that there is in a structure. So typically, not always, but not 100% of the time, but very, very typically, the wave 3 is the longest, most powerful wave. So that's why all this attention is on silver, because when this thing breaks out, it's going to rip your face off with a rally, and you're going to see $2 or $3 in a single session. Having said that, we could also go $5 lower at this, but that's not what my expectation is. I mean, I'm not saying that. It's the fibs are saying that. The price action is saying that. I'm just reading it and relaying it to you. So those are your parameters. Very clear. What I'm not clear on, how could I possibly, make a prediction? I can't tell you what's going to happen. I can just give you parameters. So hopefully you've gotten some value out of this video. Smash the like button, subscribe if you're new. You're going to want to subscribe and get the notifications coming, so when I make a video, you'll be made aware. If you're already with us in the Professor Trades Club, thanks, man. Love you guys. Love the club. Love the Professor Trades. If you don't know what I'm talking about, check out the description in this video. Thanks, guys, for the coffee, man. I love it. You can buy me a coffee. You see the thing scrolling to the bottom of the screen. It keeps me motivated, keeps me going, keeps me consistently posting these videos and sharing the analysis with you for free 99 on the internet. All right, you guys, thanks for watching. Do not get killed trading futures, whatever you do. All right, guys, see you in the room. Have a great one. Bye-bye.